It is potentially the greatest single technological breakthrough in human history. And again, I cannot state this strongly enough. It will alter the course of humanity. Every business on the planet will adapt, adopt, or die. If I want a different mousetrap, Tesla is the place to go. From an investor, AI is the theme that is going to take it there. Figure out who you are. Are you an investor or are you a speculator? Because you like to think you can be both, but my experience is the market's not going to let you be both. Are they right? Are they profitable? I mean, again, if that individual or those individuals have made their target, they've made their price, and they've gotten out, then good on them because they succeeded, right? They achieved victory according to their own playbook. But my playbook is different. My playbook is, this game is going to continue for a long time to come. I expect to own some form of Tesla for the rest of my life.
Tesla just did it again, and the haters are speechless. Tesla's blowing past Wall Street's expectations, and our guest today, Keith Fitz-Gerald, says this is just the beginning. Today, Keith breaks down why betting against Tesla right now is like betting against Steve Jobs in 2007, and why he thinks Tesla could hit $600 soon. He's calling Tesla the next trillion-dollar utility and not just a car company. Megapack 3, Mega Block, and 1 million humanoid robots on deck by 2030. Keith Fitz-Gerald is principal at Fitz-Gerald Group, which provides consulting to professional wealth managers. Keith has done more than 3,000 primetime appearances on the Fox Business Network, CNBC, Yahoo Finance, Bloomberg, and other networks around the world since beginning his career at Wilshire Associates in the 80s. Keith also publishes the popular Morning Five with Fitz and One Bar Ahead, read daily by tens of thousands of investors around the world. Welcome, Keith. Thank you for joining me again.
Thank you so much for having me. It's an honor to be back.
It's been fun. We had you back several times now, and each time you've made some predictions. One of the things I like about you is you are one of the few analysts, portfolio managers, investor consultants who is able to stay with your conviction on Tesla well ahead of everyone else. And so far, the story you're telling has worked really well. So let's get started with why are you comparing this period of time for Tesla to, I think 2007 with Steve Jobs?
Oh my goodness, this is quite literally the trillion-dollar question, right? Steve Jobs was known for doing the unthinkable. He was known for changing customer perception, but most importantly, he was known for changing the rules. And the reason I look at what's happening now is you have tremendous parallels between now and back then. You have a technology that people thought they understood, which back then was the smartphone. You had a price point that people thought they understood, which back then was the way communications and technology worked and what it cost you to use it. Today, he's introducing all sorts of new things that are going to obviate those rules. So the parallels in terms of leadership style, leadership vision, and the actual mechanics of the issues, the devices themselves, tremendous parallels as far as I'm concerned. So I think we're on the cusp of something huge. And if you look at the macro level, that's all reinforced by what's happening with AI, what's happening with storage, what's happening with FSD. I mean, you just go right down the list. Everybody who thinks this isn't possible is going to get a red flag right in the face and saying, oh yeah, watch this. I mean, I think Musk has been dared, and that's really the wartime CEO that we're seeing.
I just read your previous newsletter, and you had a really good investing tip I thought that I'd like you to share with everybody. You said something like, wannabes often focus on being right, but the world's most successful investors, they focus on being profitable even if they're wrong. Take a hard look in the mirror. Tell me who you are. But tell us more about what you thought about that.
Well, sure. This is a lesson that I learned a long time ago, right? And many wannabes, many aspiring investors, it's human nature. You want to be right. Like, let's have a discussion about X, Y, and Z. I want to be right about this issue. But the problem with that is it doesn't necessarily translate to the investing process. And the world's best investors have a spin on that, right? And again, I learned this the hard way back as a young buck when I was doing early portfolio management and working with our consulting clients. It's not whether you're right or wrong. It's whether you're profitable. So you've got to play to win. You got to move every object. You've got to take every eventuality. You got to use the right tactics so that you win, because it's possible to be profitable even if you're dead wrong. And that's the piece that a lot of people miss today, because they can't separate the right from the profitable. And again, you look at people like Ron Barron, you look at Elon Musk, you look at Steve Jobs, you look at Warren Buffett. They could care less about the noise. They are all signal all the time because they want to be profitable.
Talking about noise, let's talk about Wall Street.
Turn up the volume, yeah.
Yeah, Tesla, basically crushed the Q3 expectations, and Wall Street was still being very conservative. What's happening with them from your perspective? You know them really well. What is their mind? They're just chasing the stock at this point. They're raising their price target by hundreds of dollars. This isn't logical anymore. It's not like, oh, I see that this is now rising, so I'm going to do it $20. No, it's like, oops, $150. That's $500 billion. Because
There's two things going on, right? I mean, the
yeah.
spreadsheet gang is trapped in their own past. And when it comes to a technology like Tesla in all of its guises, they can't model stuff like the impact of FSD or the stuff like the impact of robots on human mobility or caregiving or even labor. So they pretend it didn't exist for a long, long time. And so now they've kind of caught between a rock and a hard place, right? So the spreadsheet gang has figured out, wait a minute, maybe we didn't do that correctly. So you still see estimates that are wildly all over the map. Some people incredibly bullish, some people incredibly bearish. But that comes down to looking backwards through a lens they think they know. Now, the more progressive analysts are suddenly raising bar. They're putting it up $50, $100, $200. Now, suddenly you're seeing these price targets that you and I've talked about for many years all of a sudden being put on the map by people who couldn't spell Tesla 10 years ago, right? And the reason they're doing that is something that most investors on the individual side will never think about. What's happening on the institutional side and with regard to the professional side is you've got clients, people like you and me, individual investors who are asking, why don't I own Tesla? How come I don't have more of this or more of that? And suddenly you've got both sides of the house asking for Tesla. So the analysts who are notoriously fickle, who are notoriously famous for saying one thing, but the other side of the house doing the other. Now you got the two fighting it out. One side of the house is asking why you don't have it. And they're saying, well, we do have it. The target's up here. So it's this tremendous dichotomy, but they're trying to play catch up literally in more ways than one.
Yeah. So do you think that most of these analysts still think of Tesla as a car company, or they've switched over? And then you're calling Tesla the world's largest utility.
Well,
because
among other things, it's an AI, a data provider. I mean, the one thing it isn't is just a car company. I mean, anybody who thinks, let me back up. I get so excited about this stuff, I can't stand it. Yes, I think that Wall Street is coming around, but many of these analysts are still stuck in the past. So there's a few progressive ones. My good friend and colleague, Dan Ives, is at 600. He recognizes the AI change that we're talking about. There's several other folks you've had on your show that are now increasingly recognizing this. When I said this 10 years ago, 12 years ago, 15 years ago, people looked at me like I was completely nuts and I had 16 heads and 4 antennae and, maybe Vulcan blood. I don't know. But now they're getting it. And that's a great thing because it means that the money that's on the sidelines that has not invested in Tesla yet is looking for a home, will come running in. And that's great, of course, for everybody who's been along for the ride. But looking to your second part of your question, how does this change? Where does it go? Again, this dawning recognition that we're on sort of the cusp of something unique in human history and that this one company embodies all of this stuff. You can't define it using conventional methodology. You can't define it using conventional valuation metrics. You can't define it by sticking it into a box because it's bigger than the box. It owns the box. It's redefining the box. And this is what Jobs did and what Tesla and Musk is doing again.
So let's get right to the price targets or what you're expecting for Tesla stock. I've seen the last show we did, you nicely said it on CNBC. You said Tesla is going to be a $20 trillion company. That's a huge number. And then recently in one of your newsletters, you said Tesla $600 will be coming soon. If not by the time we drop this video. You never know, right? The stock is just going up and down like crazy. But what's your thinking of how do you do your own price targets?
Well, I do my price targets like everybody else does. I take a good hard look at the math as I understand it, as I use it. So, my math is different from everybody else. There is no such thing as a one strike fits all, one size fits all valuation model. It just doesn't work. And, Musk himself, I was totally surprised. That's not why I said it, but he himself agreed with my $20 trillion valuation and said, yeah, that's absolutely possible with flawless execution. It doesn't get much better when it comes to vindication than that. But I thought you might ask about that. So it's price, earnings multiples, it's revenue, it's free cash flow, it's what do these new technologies actually mean? It's how do they multiply the margins, improve operational efficiency? People tend on Wall Street to think in terms of revenue or bottom line, but what they don't understand is everything happening in that middle layer now, Herbert. That in fact is a revenue multiplier and an efficiency generator on the bottom line. So what's happening really is you're going to have margins expand because the top line is going to go up, but the bottom line is going to come up a lot faster. Imagine Tesla's production model with regard to energy or FSD or robotics. Those things are going to cost $30,000, $40,000, $50,000. I've seen 20,000 bandied around, but in 10 years, they're going to be 5,000. They're going to be 2,000. They're going to be, imagine what happens if your doctors suddenly prescribe an Optimus robot because it can help you as a senior citizen. These are things that are going to be like, for example, with the cell phone model today, you can go get a free iPhone, but you're not really free because what's happening is that the carrier is subsidizing the new iPhone. But that means margins go out of the way. Cost goes out of the way. Insurance suddenly pays for it. And I hate to think of what's going to happen to our insurance bills, but that doesn't change the fact that when we're talking about investing in a company like Tesla, that is a radical game changer and a tremendous margin expander. And history shows that very clearly.
Hey, it sounds like you're living in the future, Keith. How far in the future are you, though? But how far in the future, right? Because when you listen to the to the spreadsheet pushers, and they'll go, the PE ratio is 263 times 2026 earnings, and it doesn't make sense because they're just not going to get that earnings that you think is going to be there for autonomy and bots until much later. 2026 ain't going to be there, so I'm not going to give the price. They're thinking less than 12 months. You're living like, I don't know, how many years? Tell me, how many years are you looking at?
Well, let's address this head on, right? I mean, let's just really take this head on because I run into this argument a lot. And anybody who's looking at PE ratios and valuations, number one, is using a model that was built for a manufacturing economy that no longer exists. They don't understand the difference between amortizing hard expenses like plow blades and car parts and everything else this way because it has to appear in the P&L because that's what accounting rules dictate. But what they don't understand is accounting rules also dictate that if a digital investment goes straight to the bottom line, it's expense. So of course, PE ratios are going to be high. If you can take a look at the math, that means that every other item that comes on once you've expensed an item, everything that comes on year 2, year 3, year 4, year 5, the margins are 94, 95% because that's been taken care of already in the P&L. But to your point, again, people simply can't understand it. But if we look at 2022, NVIDIA was 65x earnings. They said, oh, no way, that's outspent, it's expensive, blah, 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 blah. 25 actuals were more like 12. So yeah, 262, fine. But 262 times what? Times robotics, times energy, times trading, times this, times that. When I look at the world and I look at it as an investor, I am looking for themes that are 0 to 1, to borrow a term from Peter Thiel, things that will alter the course of humanity that I can invest in now, that are already changing the investing landscape now, because the profit potential will be there for decades to come. So I flip the argument around. I don't care so much about when. Am I right about 26 or 27 or 28? I don't care. What I care is that these trends, regardless of when they appear out in the future, are already impacting the investing climate today. That's why I want to buy today.
I love it. You did a great job there. I think the way you explained it now made even somebody like me who's asked this question to so many people already, viewers of the show, have heard the answers. But you added another nugget there that I hadn't obviously knew about, but just glad that you brought it up, which is yes, PE ratios for companies like Amazon and Tesla and NVIDIA and others, they're going to be sky high, and you're hoping for this future disruptive technology to come to fruition. And then earnings are therefore not just next year. It's future earnings that you need to discount. Okay, that part I got. The new part that you brought in is that also remember that this isn't hardware depreciation, because every year you have to invest and therefore expenses are high. But in this case, the investments are now. And when those future earnings come, they're almost all profit. That's the difference why you should be open to having high PE ratios now, because it's a very different business.
Well, and here's the parallel to really drive this point home, right? There's PE creep. Now, I've been in this game a very long time, probably since dinosaurs have roamed the earth. But never mind that. What I've seen during the course of my career is what we call PE creep. And Over time, PE ratios are gradually coming higher and higher and higher. So there's a huge school of thought, value investors in particular. Well, I'm going to start because meaningful rallies, I'm going to wait for a pullback because meaningful rallies don't begin until the PE ratios are single digits and, all these sorts of things, right? Or low single. Well, those are getting harder and harder to come by because the more digital companies become, the higher the PE ratios go. And if you look at a company like Walmart, for example, you see that very clearly. The more digital it's becoming, the higher that PE ratio is getting over time. Now, there are up and downs depending on the quarterly earnings cycle, but that's really showmanship. If you look at it, you detrend it, you take a look at that, that is the inevitable progress. So the more digital our world becomes, the higher the PE ratios you want with quality companies, because that's where you get your staying power. If it's just a spike here and there, it doesn't matter. But, again, if you compare a Tesla, which is heavily digital and digitizing, I submit that that is a very different valuation process from an investment perspective than a John Deere or a Walmart or a Ford, which are still struggling with this stuff.
Love it. Yeah. So you've adjusted to the future that we're living in now, very different industry businesses than the previous. And so some investors, they're still applying the old methods to a new industry, or even if it's just not a new industry, things have changed. PE ratios have skyrocketed because we're talking AI.
Yep.
Yeah, you were going to say something?
Well, I was going to say, the oldest adage in the book, my grandfather used to look at me as we sat on the porch in Wichita, Kansas. He'd look at me and go, well, it makes no sense, Keith, to use the same old tired things and expect different results. And that's what a huge number of investors are doing today. They're just, either they don't understand or they're not willing to accept the change that's happening. There's no middle ground.
What's sad, Keith, is, Tesla investors, there's a group of us that communicate regularly with each other and help analyze the company for years. What's sad is there's a group of people, handful of them, who were big Tesla bulls and then sold all their Tesla just the months before today, which is, autonomy is about to launch, bots about to be third generation, like autonomy. It's like really finally solved. And because they kept saying that, one of them, for example, the example they give is, it was too high priced. The PE was too high. The value was too high. I'm going to wait for it to fall to 250. Then I'll buy at 250. How do you talk to people like that who, and he claims he's not he still claims he's a long-term investor, but I'm going, you're a value investor. You're a momentum investor if that's the case, because you can sell all when you think it's valued high, and I want to buy it cheap when it goes back down. Well, so how do you answer to that kind of a thinking?
Well, number one, more power to them, right? If you can do that, then that's fantastic. Because again, there's no right or wrong, there's profitable. So I know investors who do the same thing, and they have that model, and they're just going to be very patient, and they're going to deal with it. But every one of those investors that I know that does exactly that also understands the trade-off, because if you unload a stock like Tesla and it takes off based on all the reasons we're talking about, now you got another problem. Now you got to get back into it and meaningfully establish a base for the next run. So your risks are actually quantitatively higher because you're trying to re-enter and catch a train that's leaving the station, as opposed to selectively managing shares, which we refer to as trading around core positions as that run continues. So, again, there's no right or wrong here. If that investor knows what he or her is doing, him or her is doing, then, fantastic. But the dilemma is, how do you get back on the train when it's leaving the station if suddenly you decided to get off of it? And I don't know that there's an easy answer for that. I see loads of investors who tell me all day long, all around the world, oh, if only I hadn't sold Amazon at this, or only I hadn't sold NVIDIA in 2014, or only I hadn't sold Tesla early on. Because a lot of them are trapped in this value proposition that we've talked about, and they're still on the sidelines. In 2009, for example, the global financial crisis scared so many people so badly that I occasionally still hear from investors who today still haven't gotten back in the marketplace, and they've missed, it's amazing. It sounds preposterous, but you can't argue with fear, because it's very real and it affects each of us differently. And we see that with in tens of thousands of investors around the world. So, as much as we can say, oh my gosh, how could you possibly do that? I've made that same mistake over the years with various stocks, thinking I'm smarter than the market, but the market's always going to prove you wrong. That's why I say take a good hard look in the mirror. Figure out who you are. Are you an investor or are you a speculator? Because you like to think you can be both, but my experience is the market's not going to let you be both.
Okay, mic drop. That was good. It's just sad because they were big Tesla bulls. They held for a long time during the tough days. They sold just when it's about to run. I don't know. Maybe they're right, right? We don't know.
Well,
It could fall.
again, are
and
they
they'd be
right or are they profitable? I mean, again, if
Yeah.
if that individual or those individuals have made their target, they've made their price, and they've gotten out, then good on them because they
Yeah.
succeeded,
Right.
right? They achieved
Yeah.
victory according to their own playbook. But
That's right.
my playbook is different. My playbook
Yeah.
is, this game is going to continue for a long time to come. I expect to own some form of Tesla for the rest of my life.
Yeah, you're speaking to the audience here. Many of us feel the same way. What about the other side? Just curious. I know this doesn't really matter much, but there's the other guys who love Tesla, bought a lot of Tesla, and then they go, I'm going to wait until I see the stock starting to run, and then I'll buy and go all in. And that's fair. Again, none of this is wrong. Everybody should have this. And then they'll say, it doesn't matter to me if I lose 10, 20% of the jump, because what matters is I just keep going up. What do you think about that strategy?
Well, again, having worked with thousands of traders, institutional and private, all over the world for decades, that also comes with Occam's razor, right? Because there's no guarantee that momentum continues. Momentum can change. And with the stock market, unlike rain or river flows or other statistical anomalies, doesn't ebb and flow like we think. In fact, today, with the rise of computerization and passive investing, there's a good case to be made that you're going to see more and sudden reversals. Volatility that previously would take months or even years to play out now plays out in a matter of days or even hours because the computers are so fast. And you're talking 80, 90, 95% of all trading activity computerized, trading so fast humans can't keep up. So I think that's great thinking. It's great thought. If they've got rigorous discipline, they understand that they're really going to make a move and they're not going to second guess themselves. That's how they're going to beat that odd. Or they're going to use the appropriate structure with options or combinations of positions to minimize risk while they're building that position, because they can't just jump in. You might as well go to Vegas for that. What you got to do in a situation like you're talking about is you've got to learn to catch the first part of it, and then you got to have the conviction to stay in, and then you got to have the conviction to add to it. So all along the way, you've got to have this sort of steady hand on the tiller. And that's the key. If they've got the discipline, they can do it for sure. And if they're okay missing 10 to 20% of the first quick move, that's okay. But they've got to be sure telling themselves that when it's run up 100% and they're sitting on 20%, that they are comfortable with that.
Okay, we'll come back to stock talk because it's fun, but let's get right to the actual fundamentals here. So you had a full newsletter. You talked about Megapack 3 and Megablock, utility scale batteries. Tesla's more of a car company. They're an actual utility.
Without wires.
World's largest utility without wires. What do you mean by that?
Well, this is really interesting. Something I've been waiting for a long time to see Tesla do. And now they're finally getting the capacity and the technology to make this happen. But, I have always believed that Tesla was never about the cars. It was always about the data. It was always about rewiring the electric grid and what we know about energy. So to me, the block, the trading, the software, the cars, really what you're talking about is a distributed grid. So the block technology, the transformer technology, the way that this is being put together, suddenly you have massive data and energy storage points that are distributed in ways that are outside the traditional utility channels. You don't need big power plants anymore. You don't even need huge transmission wires. What you need is the AI, the software, and the distributed generation, including our cars, to move that capacity around in real time. And I think that's the world that we're getting to. So, if I were a public utility commissioner and I knew what was coming, I'd be worried sick, because think of how many bonds and stuff still have to be paid off. Think of the energy bonds that have got to be, dividends, the income, the municipals, all of that stuff is related to an antiquated structure, and the payoff is 30, 40, 50, 100 years from now at the taxpayer's expense. I wouldn't want to have to answer that equation when the time comes.
Yeah. Okay. Yeah. So I think you're right, because every car is just a battery. Certain
With
Basher
wheels.
calls them batteries with wheels. And he did this great show one time. He did this great analysis. And he said, analysts, Wall Street looks at Tesla as a car company.
Yep.
And they see car sales, and they see the car sales flat, and in fact, a little bit dip. And they go, oh no. But he goes, well, what happened in those last 3 years? Well, Tesla also sold Megapacks.
Right.
And then he converted a Megapack to, how many cars is equivalent, vehicle
Oh,
equivalents to
interesting.
each Megapack. Yeah, yeah. Because if I sell you a Megapack, well, there's batteries. I could have easily sold them as cars. Then when he did
Ah.
that, it's a 17% growth rate of
Oh, that's
cars.
fascinating. I wish
You
I'd
like
thought of
that?
that. That's
I liked
brilliant.
it too. But
Well,
every car sold, it's just a way to think, right? Because
yeah.
they're selling basically a car is a battery, and they're
Well,
selling batteries
my
in
belief.
wheels and batteries on kind of stuck together.
Exactly. And I think that this trend is going to accelerate, but also I think that it is so significant. And again, Wall Street spreadsheet gang does not get this. I think Tesla, when you factor in the data, the robotics, the energy, the blocks, the battery storage, the roofs, I mean, everything, I think
Mhm.
Tesla potentially makes 10 times per car what
Oh,
Ford or GM makes in 10 cars over 10 years. And that's
hold on.
very, very close upon us.
Yeah, I'm gonna blow your mind away
Okay.
when we talk about that point. But before we move off of energy, I'll come back to that. So every car, I think the cars that are being made now has V2G, vehicle to grid,
Yeah.
so that you can take the car to sit in your garage, plug it in like you normally do, but instead of electricity going just one way into your car,
Yep.
you could feed it back. And so imagine all the cars out there,
Oh,
all
yeah.
plugged in. Those are all available, not only for the battery side of it, but eventually also the compute.
Exactly.
You're going to
Exactly.
be coming back to me someday and you're going to go, Tesla's not a energy company. They're not a utility. They're an AI compute company
Well,
without wires.
I think they're gonna be. I mean, it's just, it's
Yeah, they
so
are. Yeah.
brilliant because people, it's fascinating to me because every time I take somebody for a ride in, one of our Teslas and they've never experienced FSD or they've never experienced the energy or they've never experienced the efficiency, the convenience, the quality. I mean, their minds are just because they have no idea the technology is at that point already. And so, for example, the other day I took somebody who I think they owned a Ford or a GM, and they're talking about how they had lane assist changing and blah, blah, blah. I said, okay, let's go to the grocery store. And I just put in the directions, and the car took us all the way to the parking space. And they're just, holy crumbly. That's the kind of stuff that again, I think the shock factor of Tesla alone is not being imputed into the brand value. And that's also part of the equation, the 600.
Okay, let's go back to Megapack still. So you said that the Mega Blocks, that was just launched 2-3 weeks ago, utility scale batteries that deploy faster, pack more power, make life easier for utilities growing in demand. You said Megapack 3s, 5 megawatt hours, up from 3.9. And Tesla can roll out a gigawatt hour in 20 business days. So that's
Yeah.
where you think that it could be the world's largest utility without owning a single wire. Yeah.
Yeah. And
Multi-trillion dollar market.
less complicated permitting, faster installation, easier installation. They can do it at almost the drop of a hat. I mean, 20 days is nothing. If you have to try to put together a block or a transformer station, the traditional one, you're talking weeks of permitting, weeks of construction, traffic, nuisance, everything else. Tesla walks in and goes, boop, 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 boop. It's like big Legos that are plugged in. I mean, it's brilliant. And again, the conventional industry does not grasp just what Musk is driving for. He wants plug and play at an industrial scale.
Okay. So I think when we drop this video, we're recording it on a Monday, but we'll drop it on a Saturday. By then, lots of the world has changed significantly
Yes,
for
it will.
Tesla. So we don't know yet what it is, but the viewers would know what happened. But here's the theory that I just learned from one of our viewers. It's a brilliant idea. It's going to blow it blew my mind away. It made me sense. Tesla's going to sell these more affordable vehicles, but don't be shocked if the pricing is kind of high. And each of these vehicles, remember that the kind of the leak right now shows that they don't have the rear screens. They're really stripped down. And the thinking is that the prices, if you want to buy one, is going to be sky high expensive if you want to buy it outright. But if you want to lease it, might be at $200 per month. And then once it goes off lease, which they're counting on it to be, Tesla owns that car, they'll put it into Robotaxi network. They'll outfit it to be able to be Robotaxi ready at that point. So not only will Tesla make make money they'll make a little bit of money on the lease, but they'll make most of the money off lease when it's a robotaxi. And so you were saying that every car that Tesla makes is like 10 times the price of a regular car. That's how they do it, right?
Well, 10 times
That's
the
how they do it.
value creation. I think that the profitability per unit is going to be 10 times per car than what Ford can make with 10 cars over 10 years. And, again, while the Tesla, that's a brilliant observation from one of your viewers, by the way. So hats off to whoever suggested that. That's really clever. I hadn't thought about that, but it's spot on, I think. But remember also all the data that's being transferred, all the subscriptions, everything that's happening while that car is in use, that's all being monetized. It's being monetized for finance. It's being monetized for insurance. It's being monetized for better FSD. It's being monetized for robotics. It's being monetized for energy transmission and redistribution. So, in addition to the data itself, all the electrons moving back and forth are actually worth something. And, again, that's where I just think so many people haven't yet put two and two together.
Okay. Let's talk autonomy. But here's what's confusing to me, Keith. Your last newsletter said you talked about, of course, the Q3 numbers, which you had to, and that, they put up the numbers, and then, of course, Wall Street completely missed on it.
Yep.
You talked about energy, and I just explained everything. You talked about the third-gen humanoid robot coming, and then you said Tesla to 600, but you didn't talk about autonomy. I forgive you. I get why. I just put a little, just having fun with you. Newsletter doesn't have, the most recent one doesn't have anything about autonomy. Come on, dude.
Well, we talked about autonomy a lot.
I know.
One of the challenges we have, we were very, very blessed. We have a worldwide audience. There's tens of thousands of people deep. And I can't rehash the same stuff all the time. Autonomy is clearly a part of that. But again, even autonomy, right? The act of autonomous driving, the act of an autonomous vehicle, it's not the autonomy that's valuable. It's the data that drives the autonomy. That's the part that's worth the money. And the autonomy, the greater the autonomy is, the faster it rolls out, the more completely, the more safely, the more valuable that stuff is. And to me, the secret with autonomy is changing a few lines of code and adding billions of dollars to both the top and the bottom line. So yeah, autonomy, duly corrected, duly chastised. But yeah, it's.
I'm just fucking.
Yeah, I know you are, but you rightfully so, busting my chops.
Can you just dig in a little bit more about it's the data that matters? Explain that a little bit more.
Sure. Again, this is one of these great transitions in human history. Now, we've seen this, in the age of navigation. We've seen this with the British Navigational Act. We've seen transition to steam, distributed generation. We've seen it with the introduction of radio. We've seen it with the introduction of the washing machine. We've seen it with the introduction of penicillin. Every time you have a transitional point like this in human history, what you have is an entirely new value proposition being recreated or created from scratch. So autonomy, people talk about the function because that's what our understanding of autonomy actually is. But as a futurist, as an investor, I look at this and I say, okay, where does this really go? Well, this really changes how we think about labor, how we think about mobility. It's how we think about ensuring mobility, seeing how we have EMS services. How do we get from place to be? How do we transport stuff? What does that look like? Are robots loading and unloading it? How much human invention is involved? How much humans are working with this stuff? So the data that pins or pulls all of that together, and I haven't fully constructed this in my own head yet, sometimes it's a push, sometimes it's a pull. But what I do see is this increasingly dense spider web of data between all of these different touch points. It's like the Internet of Things on steroids. And every piece of data, every bit, every byte that's moving in one direction or the other is potentially within the Musk universe, within the Muskonomy, is usable, is monetizable to do something else. So autonomy is not just moving by itself. It's all the other things that get enabled. And I think we're going to start with $5 or $10, per dollar invested in autonomy that's going to come back to us. But very quickly, it's going to be 10, 20, 30, 40, 50, when that stuff matures.
Yeah, I can think of a couple examples of where you're headed with that. So number one, all the cameras in the cars, and they're tracking everything. And then version 14 with the hardware 4, and imagine once it gets to hardware AI 5, right. AI 4 becomes AI 5, becomes AI 6, becomes much more powerful. It can now read. It actually understands that is a fire hydrant, that says stop, that street line says, arrows this way. So it truly understands the world, and then it can it knows the weather.
Exactly.
Right? That's data. This is all data. It'll know traffic patterns. And then the other part is when it goes into a Starbucks, the screen will change and it'll be a Starbucks ordering system, and you can order your food. It'll know all of that, like
Well,
everything combined together.
not
Yeah.
only will it know that, but it will infer what you
Yeah.
need. Because we've seen generational AI, we've seen iterative AI so far, but the real horsepower is going to be inferential AI. This is where we're truly going to get the Star Trek-like inference of the, computer do this and that and the other thing. That's where this is really going to get valuable. And my view of the world is that we are on the cusp of it. We've got a lot of prototyping to take place. There's still going to be accidents. There's still going to be uncertainty, but that's always the case with the introduction of new technology. But I think in this case, it is so significant that it is going to alter the course of humanity, which is why, as an investor, I keep coming back to, right or wrong, I don't care. Exact timing, I don't care. What I care about is that this is inevitable at this point.
Yes, inevitable.
And that's
Yeah.
what we have to focus on.
In-cabin camera knows, can see me, can see if I'm, chipper or not. Time for a coffee. It knows what I ate.
Yep.
It knows the weather. It knows if I just had exercise or I didn't have it. Did it just take me from the gym? It knows everything about me. And then it goes, I know what you're going to order, and just takes you there and orders. You know what I mean? It's like right now you got the Starbucks app. It knows all that info, but it's
Right.
it's all by itself as
You know
opposed
what's
to
really
like
interesting
the
to me?
weather.
Yeah. So I hadn't thought about this, but we recently made a trip down to Florida for my daughter-in-law's winging with U.S. Navy. And as part of that, we had to rent a Toyota RAV4, which is a great car. Toyota's
Sorry.
a wonderful company, right?
Sure.
But all of a sudden, I had to use a key. I had to manually set the climate. I had to input the directions, the navigation, and I had to alter all these things. The seats didn't arrange themselves. The car wouldn't lock itself. It wouldn't unlock itself. I mean, it's like I can think of about 30 or 40 different things that I no longer have to do when I drive a Tesla. I mean, again, I just like mind blow because I've become so used to it now that when we got into the Tesla, I'm like, what do you mean I have to use a key? Oh, I got to lock it? Seriously? It just basic things like that. The regenerative braking is very different. Suddenly the car coasted, or just the littlest tiny things that have been so clearly executed and thought about because they're green sheeting all of the Tesla models, whereas everybody else is still stuck in the past. I mean, the dog mode, for crying out loud. How come nobody invented that 100 years ago? That's as basic as it gets. And yet that's a breakthrough. It's amazing.
That's amazing. Okay. Yeah. You don't know what you have until you leave it. And I get you. Okay. Let's go to bots. And again, back to your newsletter. It's chock full of stuff I can needle you with. One of your titles was Tesla to unveil third gen humanoid robot in 2025. We're talking 2 months from now. Okay. So I've been asking this question to everybody that I've, been interviewing. And what I found is, like most people are actually expecting that the third gen humanoid robot will be unveiled in 2025. But myself, Scott Walter, who's a robot expert, Dr. John Gibbs, we all hope that they do not share the third gen robot in 2025, that they'll do it when they're ready to do production, which is maybe the first quarter of next year. But you are pretty straight. Yep, it's going to be here. Other people, like legendary investor Chris Camillo, he's making a bet that Tesla is going to not only unveil it, they're going to unveil the third gen in November 6th at the shareholder meeting, because the shareholder meeting had the shape of the robot, and he expects it to be shared there. But anyways, how confident are you that it's going to be revealed in 2025?
Well, I'm 100% confident that I could be wrong. How's that? This business, right? The thing that people don't get about investing and trading is, again, this right, wrong, profit, or whatever. What they don't understand is you want to invest in probabilities, not possibilities. So, if I'm wrong and I'm off by a couple months or 6 months, okay, fine, I'm wrong. But that doesn't change the fact that this thing's coming. So the question is, how do I assign my investing probabilities, and what do I do with my position in the interim? So yeah, I think it's going to be 2025. I think there's a high probability that we're going to see it or some form of it at the investor meeting. The video that launched this past weekend of one of the Optimus robots doing kung fu was jaw-dropping, because I practiced martial art for many, many years. I know how hard it is to do that as a human, but to see a robot learn how to do it by watching and observing the way a child does, I mean, man, So, whether it's exactly 2025 or a little bit into Q1, I don't care. I think
Yeah.
it's going to monetize either way. But the important thing from an investing standpoint is that this is inevitable now. And how it unrolls is going to speak volumes about where society goes next. We watched Senator Bernie Sanders, for example, talk about all the jobs that are going to get lost. What he didn't say is the jobs are going to get lost by people who don't learn how to work with AI. My view is you're not going to lose your job to AI. You're going to lose your job to somebody who learns how to work with it. We have a tremendous opportunity to expand humanity. I believe that's what Musk is driving at. I believe that's what I'm driving at as an investor.
Yeah, I agree with you. And then the humanoid robot, what is your thesis on that? Like, obviously, you and I, I'm assuming you're Tesla bull. You sound like you believe that this is going to happen. There's a lot of people on the other side who will say, Tesla, just like you've heard them say that Tesla's autonomy, robotaxi is just going to be a commodity. In 3 to 6 months, everybody will come out with their version of autonomy, and it'll be a commodity. And then same thing
I
with
don't know how they
Optimus.
get there. I mean, nobody else has got the driving database. Nobody's got the inference. Nobody's got the technology. I mean, you look at pictures of Waymo, as good as those cars are, they're $200,000 a unit. They get stuck in puddles, 6 of them beehive together at an intersection. I mean, just like, okay, fine, right or wrong, I want profitable.
I know that's so obvious to me and you, but I'm telling you, there are people.
Oh, I know there are. I run into them all the time.
Dead serious.
I do. And they're,
I mean,
yeah.
they point to the fact that this has happened in all of technology history. As soon as something is invented, it's just software. Everybody comes up with their software and they just copy it. And I get it. I get what they're saying.
That's where I think it's wrong. That's
exactly.
That's the linchpin. It is not just software.
Exactly.
It is a massive intersection of database, computational intensity, inferential AI, and the real-time accumulation of information that nobody else has. So until somebody like a Rivian or a Ford or a GM can offer, can put together a comparable database of real-time information, there is no it's just software argument. When everybody else can have that and they have access to that database, then okay, fine. But Tesla's the only one that's got it right now, period. End of discussion.
You have to have a supercomputer. You have to have billions of miles driven neural nets. There are 4 Chinese car companies who dropped LiDAR, started copying Tesla, and then just a couple months ago, the Chinese government did a whole test, head-to-head test of 36 autonomous companies, cars that have autonomy, against each other. Tesla was head and shoulders above everyone else, and the next runner-up was they would say that they're 2 to 3 years behind in their tech, and then the vast majority failed outright, like 50+% just failed completely outright. So this notion that everybody will copy them. Yeah, the 4 of them are trying to copy Tesla because they realize neural nets, vision only, supercomputers is the way to go, but they're 2 to 3 years behind. They're not 6 months behind. And okay, let's say you are just 6 months behind. Where's your cars? You need to start building cars that have this, whereas Tesla has been doing it since 2012. All the hardware 3 cars, if they upgrade them, they'll all be able to become autonomous cars. You're starting from scratch.
Yeah, and that's an interesting one because I see, like, for example, recently, the president of Xiaomi admitted that they bought Tesla Ys and they took them apart down to the bolts to see how they worked, right? That's the kind of company you want to watch out for because, number one, it's extremely unusual for a Chinese senior executive to admit that they bought the competition, they stripped it down to the bolts because they want to see how it works. Number two, Xiaomi has a long history of doing exactly what they're talking about, reverse engineering and then improving upon it. But even so, they still don't have the data. So where are they going to get the real-time data? In my supposition, again, this is Keith's rule of the back page here, because I think the news is still out there on the back page. But I think what they're going to do is they're going to connect it with something like an Alibaba, a super app. So they're going to come at this problem from the other direction. They're going to gather their mobile data via the Chinese user community rather than the miles driven, and they're hopefully going to backfill that data. If I understand the Chinese mind like I think I do based on decades of experience there, watching them develop high-tech manufacturing, including their stealth aircraft and all this other stuff, I think they're going to approach this bet from the other side. So Xiaomi is one you want to watch out for. BYD is clearly in the game, clearly has a head start. So it's interesting to me.
BYD does not have a head start in autonomy.
No, but they have a head
Everything else,
start in
sure.
large
Yeah,
scale vehicles, in
sure.
locomotion, in other things. So again, they're coming at this from this same space. And this is something we talk about with investors, again, on a regular basis. People say, oh, they're investing in this technology or that technology. They don't understand. AI is the battle for it all. This is the big enchilada. And it doesn't matter whether you're coming at it like Apple from devices, you're coming at it from Tesla's standpoint through energy, you're coming at it from Google, which is search, Meta through its glasses, Xiaomi, BYD coming through its high scale movement, large scale industrial activity. It's this piece that they want in your life. That's nobody has cracked that yet, and they're all getting close. And I still think Musk is across the finish line first.
Yeah, for sure. What's your thesis on Optimus? And if you want to obviously lump in AI, because you should, but or we can keep that separated. But what's your thesis on Optimus, humanoid robot?
Well, I think it's going to radically change the concept of labor. I think it's going to alter human mobility. I think it's going to alter our life in ways that we don't yet anticipate. Suddenly things as mundane as housework become something you can free up your time with because the robot's going to be able to do it. But on the industrial side or even the medical side, imagine one of the world's best brain surgeons using an Optimus robot to operate on a patient who is thousands of miles away because they can selectively move through that robot. It's going to be Tony Stark time. And so that to me is another wrinkle. I think it's going to change elderly care. I think it's going to change how we think about medicine. I'm already hearing stories about elderly people who are using FSD to compensate for their lack of driving skills in their 80s and 90s. They're still able to get where they need to go. So again, these are all, use cases for which we have not properly assessed the value. Now, the dark side of that, I think, with regard to Optimus, is we don't know what the safety gates are. We don't know what the rails are. We're not ready, legally speaking. Our legal system is not ready for the robot did it. So how are we going to handle things like programming, strength, Fisher, when the robot makes the decision to save one, kill five, or kill five, save one. These are decisions, yet our legal system isn't even remotely equipped to handle, for which we have no precedent. So there is both a light and a dark side. I'm encouraged. I'm optimistic. I think Optimus itself, I can't wait to get my hands on one.
What you're thinking about the Elon's comp package that was just released and it'll be voted on November 6th?
Love it. Love it, love it, love it. I think, this again, we live in a world where somehow success has become a bad thing. I think when you have somebody like that who is arguably on par, and a lot of people will find this to be financial heresy or a very controversial statement, but he is on par in my mind with Michelangelo, with Da Vinci, with any of the great thinkers in human history. And he is all signal, no noise. I think putting the compensation package in front of him like that is good for shareholders. I think it's good for our planet. It's good for humanity. People will argue with all of that wealth being concentrated in one individual. And I don't know what to make of that. I stay out of those arguments. But from an investing standpoint, I think it couldn't be more appropriate.
Is it a catalyst on November 6th once it's officially voted on, or is it already completely built in? Everybody knows exactly what it is. They feel it's going to pass.
I think we're already seeing the answer to that in Mr. Musk's behavior. I think we're seeing him charge ahead, doing what he does best. And, I think he's operating on the assumption that he's going to get it. And if he doesn't, it would be tremendously foolish and short-sighted of anybody who votes against it, in my humble opinion. I might be wrong. It's just my opinion, but it works for me.
Yeah, exactly. And then Tesla's an AI company. So to what extent, the whole entire conversation is you basically alluded to that's the main reason. But tell me about your thinking of how is Tesla truly a real world AI company? Is it, what is its strategy? What's your thinking?
Well, again, this is one of those things, right, where a lot of people think they understand what AI is, but they think they understand what AI is based on a construct of what we thought robotics were, what we thought a fax machine was, what we thought. Remember GoPro? That was supposed to revolutionize the world. All it did was miniaturize cameras, right? So this, on the other hand, is a completely new animal, unprecedented in human history. So I think it is very different. It's not a technology. I think investors are making a tremendous mistake if they think about it that way. It is potentially the greatest single technological breakthrough in human history. And again, I cannot state this strongly enough. It will alter the course of humanity. Every business on the planet will adapt, adopt, or die. And from an investing standpoint, it doesn't get much more basic than that. You want to buy the companies that are using it, that are pushing forward, that are embracing it, and are doing it the right way. Companies that are wannabes or just putting it after the name or experimenting, still out in the bullpen warming up. I'm not interested in that stuff. That's N+1, get a better card. If I want a different mousetrap, Tesla is the place to go. From an investor, AI is the theme that is going to take it there.
Right. Okay. So AI is a theme. Okay. I agree with you. But why Tesla? Why is Tesla the leader here?
All the data, all the infrastructure, the billions of touch points every single day are being processed in real time. People have no idea how computationally intensive this is. This is not just, I'm calling in once a day to check on stock prices. I'm calling in once a day to see if they've got a loaf of bread at the store. This is massive transference of data in multiple dimensions every single day. And it is all being processed in real time. It is all being acted upon in real time. It is all resulting in updates in real time. It is making the world a better place on a lot of different levels with, hundreds of products that we don't even know about yet, probably.
Okay. So how high can Tesla go? Last show we did, we alluded to earlier, $20 trillion. You think that it's even Elon agreed that is a potential future. How high can Tesla go?
Well, I don't think we know the answer to that yet. I mean, I think, I put $600 on the map long before anybody else even remotely thought of the possibility. Tesla has performed as expected. Now we're coming up on 600. I'm beginning to think about 700, 800, $1,000. I mean, obviously there's a lot of volatility. So the math is, there's a huge margin for error. But, if you look out a decade from now, I don't think it's absolutely unreasonable to see over 1,000, to see 1,200, maybe even more than that. I think Cathie Wood is up in the $2,500 range or something to that effect. But, it's going to split again. It's going to do all sorts of things that we're not counting on because we're looking at it based on where we are today. But I want to take out 600, then I'm going to put a new target on the map. But, a couple of years from now, 3 years, 4 years, I still think it's 3 to 5x from here.
Mm-hmm. So do you call yourself as just a Tesla bull? Is that a hyper bull? What would you label yourself?
Well,
because you said you would
myself.
hold Tesla forever. You feel like you're going to hold Tesla forever.
Well, as long as, there's obviously caveats that come with that, right? I mean, I'm going to hold it as long as I believe the investing thesis is there. Because if it doesn't matter what company I'm talking about, if I don't think the investing thesis is there, if the reason for which I bought a company vanished, then I'm out. For example, if Apple started making swimming pools tomorrow and announced that was where they're going to focus the company, I'd sell it, right? So I'm not concerned, unless I see something like that from Tesla. My current plan is to hold it potentially for the rest of my investing lifespan. But how high it goes, what kind of investor am I? Hopefully I'm a logical, rational, well-disciplined investor who's smart enough to hang on to it for as long as the run continues.
And then just one last thing back to Optimus. I saw that you had a comment saying smart investors get Optimus. What do you mean by that?
Well, again, there's the fear and there's the greed and there's folks who are somewhere in between. I think smart investors are able to interpolate between the two extremes, determine what future matters to them, and make an appropriate decision. Optimus to me is not necessarily just a robot. It's not just AI. It's not just about one facet of something. It is a comprehensive package that is going to improve multiple facets of our life. That's why I think that Optimus is not only aptly named, but we haven't even scratched the surface in terms of what it is potentially capable of doing.
Mm-hmm. This is good. Okay, thank you, Keith. Any final advice that you want to give to Tesla investors that are audience members here?
Oh my goodness. Well, number one, thank you for paying attention and listening to me. I really appreciate it because I could be entirely wrong. I don't think I am, but history will certainly clear that. So you'll decide that for yourself. But the biggest thing, right, is a company with Tesla. There are very few companies in recorded history with this kind of potential. So it is very important when you find them to think logically about them with regard to your investment objectives. And if they match, then you know what? Those things are rarer than hen's teeth. And I submit a great choice.
Thank you so much, Keith. So people can find you on their website, on your website, keithfitz-gerald.com. That's the AI dash, isn't it?
Oh, I know, the bane of my existence, but my family's had it for hundreds of years, so go figure.
Get rid of it. Just kidding. Keith, hundreds of years?
Literally hundreds of years. Go figure.
keithfitz-gerald.com and then Fitz_Keith at X.
Yeah. Correct. Thank you.
Well, you're great, one of the smartest out there, and I really appreciate you. You explain things very well. And again, conviction is strong, and that's important. And you've been 3,000 primetime appearances. And so, Tesla investors, we appreciate having you out of 100 people to go and just don't get the company, and this is so frustrating. So having you there as a lone voice, staying strong, just a few of you there. Thank you for that very much.
Thank
and
you,
people should go. A lot of these questions in the agenda today I got because I read his newsletter, and pretty good. Tens of thousands of investors are reading this thing. So it's called the Morning Five with Fitz, and then one bar ahead. There's two of them, right, that you can pick and choose or do both.
That's
Thank
right.
you very much for you. Talk to you soon.
Thank
Bye-bye.
you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.